Ladies and gentlemen, good day and welcome to the Q1 FY24 earnings conference call of E2E Networks Limited, hosted by Valorem Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be no opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of E2E Networks Limited. On behalf of the company, I'd like to thank you all for participating in the company's earnings call for the first quarter of financial year 2024. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, let me introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We firstly have with us Mr. Tarun Dua, CEO and Managing Director, and Ms. Megha Raheja, Chief Financial Officer. Without any further delay, I request Mr. Tarun Dua to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj, and thank you all of you for joining us today. A very good evening to everyone. Welcome to our first ever earnings conference call for the first quarter of the financial year 2023-24. Before we begin with the performance for the first quarter and the financial year, let me give you a brief introduction about the company for some of those who might be new to the company. So, E2E Networks was founded in the year 2009 and is amongst the biggest India-based public cloud players. We have carved a niche for ourselves by providing cloud services to businesses across workloads like artificial intelligence, machine learning, application developers, enterprise customers, and we operate within the infrastructure as a service or IaaS model, delivering the fundamental computing, storage, and networking solutions. In 2018, we got listed on the NSE Emerge, and we subsequently transitioned over to the main board of NSE in 2022. Over the course of our evolution, we have significantly expanded our customer base, and currently we are serving a robust base of over 2,600 plus active customers. So we operate out of data center facilities in Noida and Mumbai. A much more comprehensive list of product offerings of various types of cloud instances and other cloud services that we provide can be found on our website. So we would like to talk about the current demand environment where a lot of workload in the AI ML domain are being shifted to in the market. So the public cloud, as we know today, is going through a transformational shift, and that provides us with a massive opportunity to scale up. So India is massively adding to the data center capacity, and it is expected that the data center capacity, as per various industry reports, etc., is going to scale up to maybe anywhere between 8 to 10 times over next 3 to 5 years, and there are many data center players who are investing in India. Now, this is obviously in anticipation of the increased demand, both from the traditional enterprise moving to the cloud and the growing digital native demand, which is expected to grow their workloads on the cloud. So we obviously benefit from both. However, let us spend a bit more time on the shift of workloads, which is expected due to the AI, ML, and deep learning revolution that is happening. So, as you are aware that we are amongst very few players, India-born players, which natively support AI, ML, and deep learning workloads. So, while we are one of the few to do this, we also happen to do this at a fraction of the cost against global hyperscaler cloud players. The demand environment for AI, ML, and deep learning workloads, although it is very recent, it has significantly started picking up. We are seeing an increased demand from higher education and research, matured enterprises, and innovative startups due to the localization of data with a new, with the kind of like sectoral regulations and data protection requirements that are coming up. We believe in capitalizing well on this opportunity, and this could be very transformational for our company. We are also well placed and have some edge in this segment due to the cost-sensitive nature of this particular segment. So, typically, the cost of running AI ML workloads compared to traditional workloads is almost the order of 10 times of typical CPU workloads. So, like with the shift to these kind of workloads, where the typical requirements are very high in terms of like the cost. So, somebody like us offering like a competitive price definitely allows us to be better placed to take advantage of this shift. So, given these broad trends, we believe that like over like the medium term, the company should be able to grow anywhere between 30 to 40% for next couple of years. With a caveat that like obviously like we cannot like be very predictive of like whether this is consistent year-on-year growth. So as we are a small company with a small enough revenue base, this growth could come in like in a lumpy fashion. So let us talk about like the other broad trend over our lifetime that we have seen. So traditionally, the cloud in India has been serviced more towards the private cloud plus managed services side. So we were one of the first cloud operators in India to shift towards a self-services model. So we made our product to support the complete set of self-service solutions, and over the last many years we have made changes pertaining to that. So happy to share that like today 80% of our customer base is on the self-service public cloud. Now this helps us immensely in scaling up for the future. Over last many years, this transition has had a fair share of challenges. So in the past, like we have lost some of our customers, and we had to work towards replacing that revenue with other customers. So we now feel that this transition to self-service model has now probably put us apart from other smaller scale domestic competition, and also has brought us closer in terms of capabilities and technology to some of the best cloud platforms out there as offered by the global players. The basic difference between the public and the private cloud is that like in a public cloud, you offer the customers the freedom to cut down on the spend. Now, when people have the confidence of being able to cut down their spend anytime, and they won't be stuck in a contract forever on a particular spend, they are happily able to scale up their spends on that particular cloud platform. So that's one of the very basic advantages of being a self-service public cloud platform. Now, let us also talk about like how we have improved our offering over like the last quarter. So during the last quarter, we have launched and made rapid progress on many new services and features. So we have launched these, which is an advanced AI/ML workload environment, which allows people to run their AI/ML workloads much more easily. We have launched additional security features in the form of security groups. We have launched lifecycle management for our database as a service product. We have improved our advanced load balancing, which provides better capabilities to route the inbound traffic for the workload. We have improved our cloud native platform based on open source Kubernetes by additionally adding the container registry to our platform. We have launched a simple queue service, compatible service, E2E queue service. And lastly, the object storage platform, we have added replication feature, which allows multi-location replication. So, we broadly explained basically the who we are, what we are doing today, how we are innovating today. So from a business perspective, how we conduct our businesses, we are a B2B business. So a lot of B2B business in the infrastructure as a services marketplace is driven by the proof of concept that we run with our customers. So to be able to do more proof of concept, we need to invest more in expanding our capacity. So broadly, that is the theme of our investment in our infrastructure as a service over next couple of years, apart from investing more into R&D functions and building additional features. So overall, we remain very confident of the industry dynamics and the positioning of our company, and our performance continues to remain strong in the last quarter with the additional monthly recurring revenues brought in. And now I would like to hand over to Megha, our CFO, to highlight some of the key financial and operational highlights of the quarter under the review. Megha, please.
Thank you, Karan, and good evening, everyone. I will summarize our performance for Q1. For Q1 financial year 24, the company has reported consolidated revenue of 19.5 crore INR. This grew at 28.3% year-on-year in revenue terms. Our EBITDA stood at around 10 crores, which is at 41% year-on-year growth, representing an EBITDA margin of 52.82%. Profit after tax is at 7 crores, which we grew by approximately 170% year-on-year. The PAT margin is reported at 35.9%. Our revenue growth is a function of consistently increasing the monthly recurring revenue. We continue to maintain healthy operating margins and generate robust cash flow. While our enhanced margin can be attributed to improving operational efficiency as a proportion of cost in R&D and platform which are declining as a percentage of sales. With that said, I am happy to now answer any questions that anyone may have.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity. I just wanted to understand few basics about the company. So, how do we bill our clients? Is it a monthly based billing or the monthly recurring revenue that you talk about? So, is it a monthly billing, and like what are the retention rates in our company for the clients?
So mostly the invoicing for majority of our customers is done monthly. The billing is typically hourly, usually. And apart from that, like you asked the question about like basically the renewal. So typically we see like median customer typically has a lifetime value of like multiple years.
Sure. And let's say, now given that we compete with very large players, with a lot of financial muscles as well. So, and, there's a brand name also associated with these players. So let's say for an SME or some other, small industries, like what advantage do we provide to them? Is it just the price advantage with which, they switch to us, or what is our USP to the client?
See, one, of course, is like a very important, the price advantage is very important, of course, especially with the increasing cost of compute in the AI, ML, and deep learning space, where the proportion of compute utilized is like far more. So there, obviously, the price advantage is there. Secondly, there is an advantage of like kind of like being able to deal with like a similarly sized player who is very focused on your requirements. And thirdly, like we have worked with our customers over like last many years to improve our product for focusing on features which are required by our customers. So basically, the similar customers also benefit from whatever we are building for our customers today. So that product market fit is also an advantage for the customers.
Sure. And what will be the pricing difference between, let's say, us and some of the larger players like AWS or Azure or Microsoft Azure?
See, basically, like any hyperscaler would focus on providing services to the smallest customer paying a few dollars a month, all the way to somebody paying like $1 billion a month or $500 million a month. So in our case, like we focus on the products and features and services that are required by somebody who has a spend in our sweet spot, essentially. So which can be anywhere from somebody spending a couple of thousand rupees to like say 20-30 lakh rupees a month. So that is our sweet spot. So all our feature sets and the scaling decisions that we make are geared towards that. So there is a fitment for a mid-market customer to be able to work with us. So because of our focus on that particular customer segment.
Sure. And you talked about, demand being driven by AI, ML adoption, which is happening across the industry as well as, educational institutes. If you can broadly elaborate, why are we getting more advantage out of that compared to, let's say, some of our bigger peers?
So exactly for all the same reasons that I already mentioned, they all apply to the AI, ML, and deep learning workloads as well.
Mm-hmm. Okay. And do we have any edge in those services like AI, ML?
So, like the edge in technology is all about the product market fit. Mm-hmm. So obviously, like we have been an early mover into all these workloads. So essentially, like we understand what the customer is trying to do, and we are geared towards helping our customers, and that creates an advantage.
Sure. And last question was on the depreciation policy change. So we have increased the life of our assets. So any particular reason why it was earlier 3 years and now it has been enhanced to six years?
I'll let Megha answer this question.
Sure.
So the depreciation change we have changed the method of depreciation from WDV to SLM, and the life of asset has been revised from 3 years to 6 years, which is in alignment with the actual life of asset.
Okay.
And this is in compliance with Schedule 2 of Companies Act also.
So,
and to prescribe 6 years as the life of asset of computer equipment.
So normally in our industry, do we see, very fast technology change? So is the real life actually 6 years, or let's say life of our servers and all, how is it 6-7 years or less than that?
So it is around, actual life of asset is around 6 to 7 years in our business.
Sure. Okay. Thank you, and wish you all the best. I'll come back in.
Thank you. The next question is from the line of Kshitij Saraf from Task Investments. Please go ahead.
Hi, thank you for taking my question. Congratulations on the great results. Just wanted to understand how competitive the landscape is in India. Who all does E2E networks compete with? Also, with regards to the hyperscalers, is it possible for them to offer bundled products at subsidized rates to the SMEs? Is the focus there? How is the competitive intensity like?
So, we have existed since 2009, and last 10 years we have competed with the hyperscalers. And of course, we have the pricing advantage due to us being small and nimble and being very focused on building whatever customers need, then building everything under the sun that hyperscalers typically do. Now, that being said, the competitive intensity, of course, remains high. And as I earlier answered, essentially, it is also about fitment and size of the customer, how they fit well with us, and that fitment of the size of the customer, and with what we are building in terms of our product market fit, in terms of technology and features. So that creates a sustainable advantage for the customer. I hope I was able to answer your question.
Yes, absolutely. Thanks a lot. And with regards to the capex plans, would you plan to spend most of it on the GPU portion? And if so, how is the demand like, and what would be the outlook? So the basic question here is, are we looking at some sort of a linear growth which would be kind of limited by the power of the GPU itself, or is there a non-linearity component to that as well?
I'm sorry, I haven't really understood the question, but let me take a stab at it. So yes, the GPU typically is a much higher powered compute compared to the CPU, and consequently it costs a lot more. And since we are very, very focused on the AI, ML, and deep learning domain today and those particular workloads, most of our capex is going towards enabling these particular workloads. And does that answer your question?
Yeah, sorry. Let me just rephrase. My question was more around sometimes, or rather in these times, we would actually face constraints on the supply side. I mean, are you seeing that sort of a constraint when you go ahead with the expansion plans with respect to the GPU?
We have been in the business for more than nearly about decade and a couple of more years, and obviously the supply of hardware, the high tech hardware, always moves in cycles. So there will be cycles where the supply constraints are there. There will be cycles where the supply constraint loosens up. So that's a very normal part of the business cycle over here. So obviously, we plan ahead and try to mitigate these concerns with a view to be able to service our customers well. So obviously, everyone gets impacted by the supply constraints, and everyone figures out like their own particular and unique solutions towards that.
Thank you so much. That's helpful. I'll get back in the queue.
Sure.
Thank you. The next question is from the line of Keshav from Niveshaay. Please go ahead.
Yeah. Thank you. Am I audible?
Yes, Keshav, please go.
Yeah. Thanks for the opportunity. I just wanted to ask, so like as we can see, there is a global shortage semiconductor chip demand. So how do you think like the costing purpose of the GPU? How do you like view the scarce of the semiconductor?
Sorry, unfortunately, I couldn't understand your question, mostly because the voice got muffled. May I please request you to once again repeat your question?
Yeah, like am I audible?
Yes, you're audible.
Yeah. So I was discussing that as we can see, there has been surge in the price of semiconductors, due to which the price of GPUs has been rising.
Right.
So coming to the costing part, like how do you see the the upcoming cost for the customers and your CapEx plan?
Yes, so that is uniform for everyone. So basically, when the cost of semiconductors rises, like so, everyone pays a higher cost, and proportionately for everyone, the input costs rise, and obviously the compute demand kind of like is not like super dependent on the price as such. So ultimately, kind of like the cost gets passed on to the customer itself.
And like what do you think are the entry barriers to the industry, like apart from the high CapEx and
So apart from the CapEx, the industry barriers are also about like technology. So essentially, when somebody says that like, okay, a new software is launched, that launch at the time of launch is only 10% of the work done. 90% of the changes to that software and technology will happen over its lifetime, over next many years. So essentially, like having been in this technology business for many years, what we can say is that like once you have initially launched something, it will take like many cycles of changes for that technology to mature. So essentially, that technology maturation cycle is what is giving the competitive advantage eventually. So obviously, like there are enough people in the world who can make the CapEx for any amount essentially. That doesn't necessarily mean that like that CapEx itself is the only requirement for being able to service the customer. So the technology is a very important part of being able to service the customer.
Okay, thank you.
Participants, in order to ensure that the management is able to address questions from all participants, we request you to limit your questions to 2 per participant only. The next question is from the line of Saurabh Sadhwani from Sahasrar Capital. Please go ahead.
Hi, congratulations on a very good quarter. I wanted to understand the 80%, you said that the 80% of customers are using the self-serviced public cloud. So what is the business model for the remaining 20%?
So remaining customers are utilizing private cloud, which is more static in nature, which means that like any changes to their cloud configuration would like take days rather than minutes or seconds. But broadly, it's very similar to the public cloud, except that like your scale up and scale down happens in days and weeks rather than happening in a few seconds via an API call.
Okay, so are these then these might be long-term contracts, right? Given that they are private, you might have a long-term contract.
Mostly, we have followed the contractless model from the very beginning of our company. So mostly these are not like long-term contracts as such. But what we have seen is that like the lifetime value of the customer remains high both on the public and the private cloud.
Okay. And
there is not a massive difference between public and private, except that the public is technically slightly ahead in terms of like the time taken to do things on the public cloud is obviously shorter.
Okay. So, is there any training required for the software engineers to, use the self-service part of your cloud?
No, it is quite intuitive. So, it's not, the learning curve is not very deep over there. So, but obviously the software engineers are expected to know like what they are doing. So,
yeah. So,
and then obviously there is like our cloud platform team with an ability to handhold and help the customer.
Okay, so there would be very little friction for someone shifting from Azure or AWS to E2E, right?
Like obviously, like migration can be like lift and shift migration can be easy.
Not migration of systems, but for an engineer, it would be very little friction to move to use this E2E ecosystem, right?
Right. So obviously, somebody familiar with like one cloud platform would understand the another cloud platform very easily. So there is no relearning required to kind of like migrate from one cloud platform to another. But of course, like there are like business constraints in terms of like the proper project planning being required to migrate from an on-premise to a cloud or from one cloud to another. So obviously, depending on the size of the installation, it could be anywhere between like say a few days to few weeks to few months, or for very large enterprises could be very well running into like a year plus kind of time frame as well.
Okay. Yes, thank you. That answers my question.
Sure.
Thank you. The next question is from the line of Ayush Agarwal from MAPL Value Investing Fund. Please go ahead.
I hope I'm audible.
Yes, Ayush, please go ahead.
Thank you. Sir, what I want to understand was the amount of capex that you plan to do in the next 1 to 2 years, and how do you see the utilization for the same? Like, is there a lag after we do the capex, and how much lag is there?
Okay, so let me start with the second question. So the lag depends on kind of like, so it varies between business cycles. So sometimes when the demand environment is very conducive, there would be potentially very little lag. Sometimes the demand environment can be a little slack, so there would be a couple of months lag before the utilization rates shoot up. Now, with regard to how much we are planning to spend, like obviously it's kind of like difficult to place it on a timeline of couple of quarters, but over the medium term, like obviously we want to invest massively in building our capacity. Maybe like Megha can chime in over here and they give an idea of like some idea about like our plan for the capex.
Yeah. So,
Hello, am I audible, sir? Hello.
Yeah, you are audible.
Hello.
Yes, sir, you're audible. Please proceed.
Sir, I was not asking for a couple of quarters, but for a couple of years, the capex amounts that we plan to do, especially in GPU.
So, sorry, go ahead, Megha, please.
Sorry, go ahead, sir.
So over next couple of years, like we obviously kind of like intend to invest like a couple of 100 crores to ramp up our capacity, and yeah, that's the plan definitely.
And this will be mostly into GPU?
So like it boils down into all parts. So GPU alone will not like work for like any single customer. Like so obviously along with the GPU, you also are required to invest into the CPU, into the storage, into the networking gear, and a couple of other pieces of hardware. So essentially, you have to build the entire ecosystem around the GPUs alone.
Understood. If you can talk a little about the relationship that we have with NVIDIA, and what does the preferred supplier mean, that if you can talk about that, because as we understand, it is very difficult to source GPUs, especially the H100s from NVIDIA, given the demand.
Okay, so basically there is no exclusivity in the relationship with NVIDIA. Obviously, from an industry perspective, we work together with everyone, including NVIDIA, whoever are the major suppliers of the high technology chips. So whether it is Intel, whether it is AMD, whether it is NVIDIA, these three being the major providers of high-tech compute chips, we work together with all of them. And obviously, I think this question was also answered in the other form, that there is a tightening of supply chain. So there are all these things go in cycles. So the industry moves in cycles. So there is always shortage, which kind of gets resolved over a couple of quarters. So those things keep happening, and those things keep getting resolved. So, these are, in our belief, these are all short-term issues. So we don't see the environment remaining the same for forever.
But given the tight supply crunch of the GPU computes, do you see that this relationship as a preferred supplier will help us getting the GPUs faster, maybe than other players in India? Is that an arrangement, or how does it work?
Okay, so I don't know how to answer this question. So essentially, basically, the goal of everyone in the supply chain is to bring the compute to the end customers who have the demand. So we are a very essential part of that ecosystem, and obviously we will do our bit, and the other parts of the supply chain would do their bit. So the goal is obviously to service the customer.
Got it.
So, yeah, thank you. Yeah.
Sir, in the CPU compute, what would be the churn rate of our customers in the last 2 years? Because what we have observed in the past is that, when customers scale to a certain size, they maybe move to a larger hyperscale cloud company. So do you still see that happening, or how do we stop, this from happening? Any thoughts on this?
So I guess that is not cast in stone that a customer has to grow big and then they have to migrate out. That is definitely not cast in stone. So as we have increased in our size, and the customer has a particular size of the compute, typically we see the amount of compute we have is of the order of 20x or 25x of our largest customers. So in that sense, we don't see that as a manifest destiny that a customer will grow big and the customer has to move to a hyperscaler. So I believe that the customers will grow big and potentially will be able to continue to service them.
Okay, and if you can talk in what scenario they may migrate, and why are we unable to retain them? If you can talk of a recent instance, not in the past.
So I guess that is in the past for us. Kind of I would rather hear from the customers actually who are migrating. Why would they migrate out? Right now, we are not having any of these kind of conversations.
Okay, so what is our churn rate? Less than 10%, you mean?
So there are multiple ways in which we calculate churn. So, like mostly the target customer, the medium-sized customer, we don't see like a very significant churn. Although it's very, very difficult to calculate churn in a very dynamic environment. So, for example, like the relationship might be the same, but the same customer might be running like multiple organizations and kind of like what appears to be like a ramp down of compute at one place. In another account, that same customer might like increase the same ramp up of compute. Then this is a bursty workload. The AI ML workloads are bursty workloads, very, very project driven. So essentially, the customer might stop the activity in one quarter, maybe in the next quarter again they take a break, third quarter they again come back. So very, very hard to accurately model and answer the question about percentage churn for a reasonably small to be kind of like this being like statistically not possible to give like a very accurate answer.
Got it. And just a final question from me is that what would be our revenues currently from GPU compute services out of the total pie?
So again, it's a very difficult question to answer. Like I think somebody asked, like, are you going to invest only in the GPU? So typically, like what we are looking at is like AI ML customers being the major drivers for future growth in terms of the workloads that we are serving for our customers, and that has been the case for like past some time as well. So the major growth is coming from those kind of workloads. Now, there is no segregation of like what part is being run on the GPU, what part is being run on the CPU, as such very cleanly. And like those services, of course, like are not in isolation. So anyone using a GPU is also going to use CPU. Anyone using a GPU is also going to use storage, and many other cloud services. So it's not a super clean separation to be made. So, but broadly, the primary drivers workload for new customers that we are getting is majorly, we are seeing a very major proportion is on the AI ML, and that majorly uses cloud GPU.
Got it. So one final question, if I can squeeze in. What I have observed is that, and speaking to people in the industry, is that on GPU computes, there's a lot of these AI ML companies mostly run their models. Right, and their data localization is not a very strong theme. So, do you think that E2E in GPU computes in the A100 and the H100 is cheaper, like at a global competitive level, because people, even startups in India or maybe outside of India, they do look for cheaper alternatives because GPU compute is a very significant cost to them. So do you think E2E is like globally competitive in terms of GPU compute services, price-wise?
See, there is no apples to apples comparison on services. So, like we have mentioned that like we have been in the business of building this technology for the past 10 years. So obviously, it is not simply price alone that determines like where the customer is going to run their workload. And yes, the customers do tend to look for globally competitive alternatives. So, but it's the whole package. It's not like simply that like somebody is offering a service which could be significantly different from yours, but has the same kind of label in terms of like, okay, like the two of the SKUs that you mentioned, and it suddenly becomes like exactly the same service. That is not the case. So number two is, of course, like we intend to be very, very competitive in terms of pricing for our customers. So as long as there is not a super significant difference from the very cheapest class of service, but almost at the same quality level with us, we don't see that as a significant threat.
Got it. So thank you for patiently answering my question. I'll come back to you.
Yeah.
Thank you. The next question is from the line of Neerav Rajendra Shah from Taurus Securities. Please go ahead.
Sir, can you please outline the management vision for the company for next 5 to 7 years, and what are we doing to really achieve that?
See, as a technology company, essentially we intend to remain very nimble and fast moving. And essentially, when there are broad technology trends which start to become visible, and we intend to exercise our judgment these are the trends that we should invest into. So we should obviously focus on the R&D into those trends early and be an early mover into those trends. Very similar to the way we were one of the early movers into the trend of increased reliance on AI, ML, and deep learning techniques. So similarly, if there are new areas which would emerge, then we want to keep on top of those trends and capitalize on those. And next 5 years, obviously, the vision is to kind of continue to service the needs of our customer base in terms of their infrastructure as a service needs, and keep expanding our portfolio based on the customer requests for additional features and additional services. So broadly, that is the broad playbook, and the vision is to continue to execute the playbook as efficiently as possible.
Thank you, sir.
Thank you. The next question is on the line of Arpit Jain from CapG. Please go ahead.
Hello, am I audible?
Yes, Arpit, please go ahead.
Yeah, hi. First of all, congratulations to the management for the stellar numbers. I just have a couple of questions regarding your two products. First one is regarding the TIR AI platform.
Right.
I could see in the presentation that it has been helping the AI clients. So I wanted to know how is the feedback on this from our clients, and how is the platform helping the ML training and deployment simplification?
So very good question. It's very, very early in the journey of the TIR platform. So it is still there are very few customers using it in production right now, but we are getting a lot of feedback and we are making a lot of improvements. So quantitatively, it has not yet become a major driver of numbers today, but we should see basically how it performs in the coming days, and there are a lot more product enhancements and features under the same framework essentially that we plan. So kind of early to comment on how it would help the overall ecosystem. But yes, the early feedback has been very good. So people have started using it, and that is making difference in terms of the amount of time people spend to go from starting a service to starting to use that in production.
Okay. That was a very detailed answer, sir. Any numbers or any scope you want to comment here or for this platform?
Like I said, it's right now, from a quantitative perspective, too early to comment. But hopefully, over next couple of quarters, we'll kind of get deeper into how the platform is doing.
Okay, thanks. I just had one more question. So I wanted to know on the H100 compute side, do we have any sort of capacity there? I feel there is a lot of demand and waitlisting for this compute. So how E2E is placed to have any capacity there?
Yes, so we are building capacity and deploying capacity on the H100 side.
Okay, so any numbers or any you would like to share, how much is the capacity we are building?
See, right now the environment is such that we would want to put out any kind of numbers once we have deployed.
Okay. Yeah, I think that's it from my side. Thank you. All the best.
Thank you. The next question is on the line of Pratik Chaudhary from Samarthya Capital. Please go ahead.
Sir, a repeat question on the H100s. We see that on your website you've placed a request for, a wait list request for customers. And globally, since there's a very large backlog for this equipment, the industry scenario right now is that these equipment get pre-booked before even they are delivered to cloud providers. So how is it for us, and what proportion of the capital?
I have tried to answer this question. So see, basically, of course, the demand tends to get magnified because once there is a unfulfilled portion of the demand that gets magnified across multiple service providers, and that kind of shows up as backlog at multiple places. Now, that being said, ultimately the goal of the entire ecosystem and the entire supply chain is to go and service the customer who has the actual workload to run. So, us as a part of that supply chain and the rest of the supply chain is very, very focused on kind of delivering the services to the customer. So ultimately, wherever the actual demand is, that would get fulfilled. There could be short-term hiccups, short-term bumps, but wherever there is a demand, ultimately the goal is to fulfill that. So that will definitely get fulfilled.
Are we confident of securing these equipment over the next 1.5 years?
Yeah, that's a very long period of time. So all these are temporary problems that will get resolved over the next couple of months is what we believe.
And in your initial remarks, did you say that revenue growth over the next several years could be in the range of 40 to 50%? Is that what you said?
So we believe that over the next couple of years, we should be able to do the revenue growth of 30 to 40%. That being said, with a caveat that as a small company, that growth could be lumpy.
Okay, sir. Thank you. I'll get back in the queue.
Thank you. The next question is on the line of Ashok Kumar from Dalmus Capital Management. Please go ahead.
So if I recall, good afternoon. If I recall, the number of employees we had last year was around 85 or so. So what kind of employees, number of employees we propose to have this year and the next year? Any acquisition of employees?
Okay, so I think we continue to hire in all areas of our company, including R&D, including sales, including in operational support for the customers, the cloud platform team. So as we grow, we continue to hire people. But obviously the base platform exists, and the growth in terms of the base platform will not be in exact same proportion as the growth of revenue.
I see. Okay. So employees addition may not be, that much material, you mean to say?
We are a product company, so basically the cost will not increase in the same proportion as revenue. There is no direct correlation between them.
Can we know then what is the number of employees at present?
I guess Megha might be able to answer that question.
We have crossed 100.
We crossed 100. Okay. That's okay. Now, second question is that if I see your annual reports, the kind of depreciation amortized expenses is around 20 crore in the year March 23. So I suppose that is the kind of capex you had in that year?
Again, I think Megha would be able to better answer this question.
What has been the capex in the year 22-23, the financial year which has just passed?
Yeah, got it. So our capex for financial year 22-23 was around 25 crore.
25 crore. And what is the kind of a capex we are hoping in the current year and the next year? Because further years, the capex visibility may not be there, but at least for the current and next year, some kind of visibility may be there.
So we have already incurred a capex of more than 10 crore in Q1, and we continue to invest heavily in capex over a period of time.
So you mean to say it may reach at least 50, 60, if not more, easily
Right.
in the current and the next year?
Our business is basically very, very dependent on having the capacity available upfront. As a cloud operator, like you need to have capacity upfront available.
Correct.
So that the customers can come in and do proof of concept with us. So obviously, that is like a function that we want to maximize essentially. So like whatever we kind of like generate, like we want to deploy as much additional capacity as we can.
I'm only trying to understand. You earlier said that the kind of couple of 100 crores we want to have capex over next 2-3 years. I'm just trying to understand.
Couple of years, like I wouldn't say exactly 2 to 3 years.
Maybe any number of years. So I just want you to have some idea. Where will our capex reach maybe next year or maybe next to next year? Approximate. Not tied down to any numbers, but approximate. As you see it today.
So, like as much as our system allows us, like without getting destabilized, like we would like to make that much capex.
Okay. Actually, next question is that the capex will be from internal accruals, or we want to go for some kind of raising of funds?
So we definitely want to raise a lot more debt than we currently have.
We hardly have any debt at present.
Hello.
As per the last
we definitely intend to raise like a significant amount of debt to finance the capex acquisition.
Okay. And then the next thing is that if I am right, that your concentration of the customers is mainly on north and west. Am I right?
I have not
of the business.
No, so we have customers all over India. North, west, and south, of course, are the more developed parts of the country. So we definitely have more customers from all these 3 regions. And east will eventually, of course, catch up is like the hope. So, like we have customers all over India.
Okay. No, I'm not denying that. I'm saying the major concentration probably happens to be north, northwest, west, and maybe west to south, something like that. Probably the belt of central, eastern, and east south. That belt is not that much covered. Am I right or not?
I honestly don't know, because that's not the way we look at the customers. So, in terms of geography, like we are quite geography agnostic in that sense.
So my submission is that we may have an analysis of the customers and see whether we are neglecting any industrial area where our reach may be beneficial to the company.
Certainly, sir, we will take that into advisement and try to figure out like if there are any gaps in our approach.
Thank you. Thank you.
Thank you. The next question is from the line of Devesh from DS Investments. Please go ahead.
Yeah, hi. Congratulations for a good set of numbers. I just have one question, and I'm sorry if you already answered it. I joined a bit late. Can you comment on our relationship with NVIDIA, and how do you see, our growth playing out with the GPU growth side of things? Like, what I'm trying to understand is there an exclusivity or some sort of relationship that we enjoy with preferred partners?
We do not have any exclusive relationship with NVIDIA that they can't have with other people. That being said, like we work very closely with all our partners, including NVIDIA, to service our customers.
Okay, great. So, I mean, just going a little forward,
sorry to interrupt, sir. Your audio is breaking up, Mr. Devesh.
Okay, I'll try to rejoin. Yeah, sure. Thank you.
Thank you. The next question is from the line of Harendra Singh, an individual investor. Please go ahead.
Hi. First of all, congratulations on the good set of numbers. I have a couple of questions. So, our customers, who do you majorly see as a competitor of ours?
Okay, so basically, like for every deal, like essentially we look at like okay, like who is the competitor. So typically we see both like majorly we see hyperscalers as our competitor today. So where typically the customer is working both with us as well as the hyperscaler. So this is an era of multi-cloud. Multi-cloud means that like no particular customer will be able to use like a single cloud for all their workloads. So essentially that means that like they would have a certain percentage of workloads run with us, certain percentage of workloads run with other people. So essentially over a period of time, like all the cloud operators running the workloads for a particular customer would try to get a bigger share of the newer workloads as well as the existing workloads. So to answer your question, yes, like we majorly see hyperscalers as our competitors.
So when you say that companies are using a multi-cloud setup, so in a multi-cloud setup, is there some specific kind of specialized for which customers come specifically to us and not other clouds?
So basically, like the better the fitment of the product for the customer, and that fitment also includes the pricing component. So based on that, the customers majorly make a call on like what workloads to run where. Sometimes like better specialization on a particular workload also results on that workload being run on a particular cloud platform.
Okay. And so what's the current waiting period to buy NVIDIA H100? And in our current inventory of H100, what's the utilization that we have?
See, there is the what we call the form of war. So the wheel would be lifted like when essentially like you are able to kind of like see it delivered. So what I would say is like yes, there are too many reports, too much what we call kind of like a lot of like newsiness about like basically the kind of demand and kind of like timeline. So I would say like let's wait like a couple of months for like things to clarify.
Okay. Do we currently have for H100 with NVIDIA? And by when do we expect them to be delivered?
So we definitely have a plan to deploy the H100, and we should see that like those deployments coming online in the next couple of months.
Okay. And what's the current utilization on the H100 that we own?
To interrupt, Mr. Singh, may we request that you return to the question queue? There are participants waiting for their turn.
So just if you could answer this one last question. And one more question I had was that how do we plan to acquire more customers?
There are participants waiting for their turn. I'll request you to return to the question queue. Thank you.
Thank you.
We'll move on to the next question. That is from the line of Khanu Charan Swain, an individual investor. Please go ahead.
Hello everyone. Good afternoon. Thanks for the opportunity. So the question that I have is like a broad future vision of the company. So if I see like the big tech companies, they are like making like crores of revenue from India. So do you have such any plan to compete with them in future? Like how can we compete with those big tech companies? Also, I want to understand like what do we lack to service the big clients? Because right now we are targeting like small enterprises and startups. But what can we do to onboard big clients? Or do you have any plan for the future?
Sure. So let me start from the last question first. See, essentially, when we initially launched our public cloud, what we thought was that the ARPU of a typical customer would be in the range of like say $300 to $1,000, or say 25,000 rupees a month as a median, going up to like maybe lakh rupees, 2 lakh rupees. So that was our initial thought process. at that point of time. Now, over a period of time, as we have built more and more features, so we are now confident of serving larger and larger customers through our technology. So where we have also seen an increasing ARPU on a per customer basis, and especially on the target group being targeted, like we are seeing like increasing ARPU being targeted by our team, and also an actual increase in the ARPU from the customer side. So basically, it's a function of like what all capabilities you are able to provide. So we are not like in any way limited to SME. We are happy to service higher education and research. We are happy to serve the enterprise as well, and any kind of customer based on the specialization of the workload that they want to bring to our cloud platform. Does that answer your question fully?
Yeah, Param, thanks. And in the opening remarks, you said you have a data center in Mumbai and Noida, sorry, Gurgaon. So do we own those DCs, or we have like some racks and leads in those?
No, so we don't own physical data centers. Like we take the racks on co-location from much larger data center players like Entity and others.
Okay. In terms of finance, I see that our last 5 years sales growth and PAT growth is like below 20%, while the overall market was growing like more than 20%. So you said like you are planning to grow next 3-4 years like more than 30% revenue.
Like I have mentioned it to you many times that we are a small company, so kind of like the impact of all events on a small company like can be very, very inconsistent. Now, as we grow larger and larger, like obviously we will become more and more consistent. But in the near future, in the medium term, like we see same kind of lumpiness ahead of us in the future.
Okay. Yeah. Thanks for answering my questions, and good luck for the future.
The next question is from the line of Samira Mehta, an individual investor. Please go ahead.
Very good evening, sir. Am I audible?
Yes, Samira, please go ahead.
Sir, I was going to your company's website, and I noticed that your company has received certain a few certifications of ISO.
Sure.
So I want to know, does these certificates open the door of any new opportunities for our company?
Okay, so basically, like, of course, like, as we have worked for long, what I can tell you is that, like, there are many different kind of customers. So some customers do have a requirement of having the basic certifications in place. So yes, that definitely increases the overall target market for us as we kind of like get additional certifications.
Okay, and sir, also, since I have been following your company for past 1 year, so I noticed that earlier on your website, the segment which says countries E2E serve, so that segment was not there. But now the website shows that E2E has been serving various countries wherein the developed countries' names are also there, like UK and US and Canada. So have we started catering to overseas customers as well?
Yes, we do have a few overseas customers as well. So apart from the Indian customers.
Okay, and if you could quantify the % of revenue that we get from the overseas customers?
Sorry, say that again, please.
Can you quantify the percentage of our revenue which comes from the overseas customers?
I guess like Megha can better answer this question.
It is not much as of now, but we have started serving a US, UK, and other geographical entities.
Okay. Thank you. Thank you so much.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
Yeah. Thank you everyone for participating in the earnings call. If you have any further questions or would you like to know more about the company, please do reach out to our investor relationship managers at Valorum Advisors. Thank you once again, everyone.
Thank you, members of the management team. Ladies and gentlemen, with that we conclude today's conference. We thank you for joining us, and you may now disconnect your lines. Thank you.